Welcome back to the Daily Forex. In today's trading strategy, we're going to take a closer look at the RSI and the MACD indicators. This strategy is similar to our previous strategy, but it has been restudied and practiced to the fullest. But it has 95% accuracy when it comes to winning rate. And yes, it's for both boom and crash 1000 index. Alright, so let's get straight into it. First, what we're going to do is to set up the indicators and the parameters, the levels and the pixels for these two indicators which we are going to use for this strategy. Like I said, this strategy is 95% accuracy in winning rate. It always works all the time. So what we're going to do is to set up the indicator. First, we're going to put on the main window. We're going to choose the RSI, which is the relative strength index indicator. All right, on period 12, we're going to put it on period 12 while you apply to close. Then the levels you put on level 90, right, and the level of 10. While the style is going to be on 3 pixel, while I used this middle line right here, because we're only taking a buy, so we're not putting any description for either a buy or a sell, right? So what we're going to do right now is to click on done. Then the style right here is going to be on 3 pixel with this first line right here. Then you click on done, right? So this is the RSI indicator. Now we're going to put on the MACD, right? The MACD. We're going to put it on indicator window 1. Look for the MACD. Then the fast EMA 13, slow EMA is going to be on 25. The MACD SMA is going to be on 10, right? While you apply to close. Then for the main, you put it on 3 pixels while the color is going to be on black right here. Then the signal is going to be on red on 3 pixels as well. Then you put this line on this first one so that it matches the RSI, which is the relative strength index. Then we are clicked on done. Right now, this is the two setup for these indicators. Now I've just added the parameters and you can see clearly how this looks on the crash 1000 index market chart, right? So guys, this is how this strategy is. All right, we're only taking a buy from the downtrend of the MACD, right? Whenever this red line of the MACD crosses below, this red line is the MACD. When it crosses below the RSI line is this blue line right here. So when the MACD crosses below the RSI on the downtrend, it has to be on the downtrend. This is the downtrend of the MACD. When the MACD is on the downtrend, this line is at a downtrend, this is an uptrend. All right, so on the downtrend of the MACD, when the MACD crosses below the RSI, we're taking a buy for 5 candlesticks. All right, we're taking a buy for 5 candlesticks. Whenever the MACD red line crosses below the RSI, you take a buy for 5 candlesticks. All right, take a look at it. It crosses below here. It crosses below. You take a buy for 5 candlesticks. So we're not using any zoom level. We're not using any levels for the RSI. We're using the trend lines. All right. Now, our previous video we talked about how the RSI crosses above the MACD lines at the overbought region. Right, we talked about this region on our previous video, that when this line crosses above, we'll take a buy after the spike. Right, we talked about how this point right here, whenever this MACD crosses the RSI, you take a buy after the spikes. But when I've studied the RSI, when it crossed below, and I tried it, I practiced it and I tried it on the trade, and I saw that its accuracy is about 95% winning rate on the trade. I saw that it's more accurate than when it crosses above before you take a buy. All right, I saw the accuracy. Now we know that on the downtrend of the MACD, there's a lot of spikes. That's when spike always come through, right, on the downtrend of the MACD. So if you're a spike casher, you want to catch spikes, it's going to be on the downtrend of the MACD. But if you want to place a buy accurately buy for 5 candlesticks, so we're taking a buy. Whenever this line crosses below this one, we'll take a buy for 5 candlesticks. Take a look at this point. It crossed, you take a buy for 5 candlesticks, then you exit before the spikes. All right, take a look at this position, this entry point here. Very tight entry point. You see immediately the crossing right here. This is the crossing point. You count from 1, 2, 3, 4, then you exit. All right, you can take 4 or 5 candlesticks, right? You can take 4, like this point right here. We saw that here is the crossing. All right, here is the crossing. Here, 1, 2, 3, 4, 5. Then the spike came through after the 5th candlesticks. After the 5th candlesticks. So when you see that the RSI and the MACD, you know, the MACD is the red line and the RSI is the blue line. When you see that they are at each other, they are about to cross, you know, when you see this line coming down right here and this one going upwards, when you see that they are almost at this point, you take a buy because they are almost at the crossing point. So you place a buy, then you take 5 candlesticks and you exit so that the spike doesn't come through at this point. So the reason we're taking 5 candlesticks is to avoid the spikes and for a better risk management technique. That's why we're taking just 5 candlesticks from the downtrend. Remember, it's going to be on the downtrend. It crosses here, you take a buy, then you exit. Then when it crosses again, now this is another crossing, you need to take length of. This is another crossing, it crosses, you take 5 candlesticks, right? Whenever the spike comes through, this RSI line is going to go down, right? It's going to break down just like it did right here. The spike came through, it go downwards, right? And you see at this point also, it crosses below, you take a buy for 5 candlesticks, right? Like I said, I studied this strategy and it works all the time. You see right here at this point, this is the crossing, right? You count 5 candlesticks, you exit. It has to cross below, not upwards. This is an upward trend. All right, this is, you can see that this trend is going upward. If you take a look, another zoom, right? I just zoom at the market real quick. Let's take a look at this point right here. This is downward trend. It crosses downward, it starts creating an upward trend, it crosses above, right? This is an upward trend. When it crosses, this is an upward trend, the spike came through, right? So to prevent the spike, taking it from the downtrend, when this line, the red one of the MACD, crosses below, you take a buy for 5 candlesticks. Take a look at this point. Perfect. This is perfect opportunity. This is perfect strategy to trade the crash and boom, right? I'm going to show you how you can do this on the boom market, right? This is a winning strategy, guys. Take a look at this. With this strategy, you can use strategy to grow a small account and make profit with this strategy, right? All you need is patience. All right, all you need is patience with the strategy. You saw that when this red line of the MACD crosses below, it seems that price has gotten to the level of 10, right? It seems as price has gotten to the level of 10. Take a look at it at this point again. When the crossing happened here, it seems that price has gotten to the level of 10, or we could say that whenever price gets to the level of 10, you take a buy, right? You take a buy. But you know that sometimes when price gets to the level of 10 here, you take a buy, right? Okay, that's if you want to catch the spikes. We said when price gets on crash market, when price gets to the level of 90 for the MACD, place a sell opportunity to catch the spikes, right? Then whenever price gets to the level of 10, you place a buy, right? You place a buy because price has gotten to the oversold level at that point. And we're seeing here that this is the crossing, and at the crossing it seems that price has gotten to the level of 10, so you place your buy opportunity, right? So instead of you waiting for price to get to that level, you just take a buy whenever you see a crossing. And you can see that this is downtrend of the MACD and the price didn't even get to the level of 10, so it always works. It still works even when price did not get to that point. Take a look at it. The crossing here, you take your 5 candlesticks. At that point here again, a crossing, you take your 5 candlesticks. All right, you take a 5 candlesticks. This is the crossing. You take a 5. 1, 2, 3, 4, 5. Take your 5 candlesticks, right? So whenever you see a crossing, or when you see that it's about to cross, right? Let's say you are at this point here, you saw that they are so close, you take a buy, then you exit after 5 or 4 candlesticks. You exit after 5 or 4 candlesticks from the market. Now I'm going to show you how you can do this on the boom 1000 index market and make profits. All right, guys, we're on the boom 1000 index market, and what we're seeing here is that price is currently selling, right? Price is currently selling, and like I said, we're going to use the same strategy for the boom 1000 index, which we are right here, just as you can see. Okay, now we're looking at a lot of spikes at the uptrend of the boom 1000 index, right? This is the uptrend of the MACD on boom 1000 index. So we're seeing a lot of spikes, right? So what we're seeing here is that when price crossed above this blue line at the overbought here, you see you place a sell. Again, you place a sell, and now it has to cross above and not below. Okay, it has to cross above, not below. Cross above, you place a sell, and you take 5 candle or 4 candle ticks from this market. When it crosses, you take a sell. Opportunity, perfect trading opportunity for you to scalp the market and make a lot of profit. You see, when it cross above, you take a sell. Perfect opportunity. You place a sell here again. You see, take a look at it. You place a sell, you take a 5 or 4 candle ticks from the market. This strategy is perfect strategy for you to grow your small accounts. It cross above, you place a sell. Right, although we saw that the spike came through here, but the spike is a very little spike, and what we're seeing here is that price is at the overbought, right? Price order is at the overbought. Let's zoom out real quick. Here it crosses above, not below. Okay, not below, crosses above, you place your buy. All right, we saw that price at this zone, and there's a little spike here. The spike just came through before the crossing, and another spike came through, a very little spike. I think if we zoom in, we'll see that the spike that came through here is about 2 candle ticks away, but that shouldn't stop you from taking your sell, because you will still make your profit, then you exit from the market. All right, you saw that, like I said, this strategy is 95%, so there's no 100% strategy. Sometimes spike may come through, but that shouldn't discourage you from the market. We can see how accurate the strategy is working. Crosses above, you take a sell right here. Crosses above, you take a sell for 5 or 4 candle ticks. Here, another good opportunity. Crosses above, you place a sell. Right, now guys, you can see how perfect this strategy that I've just shared with you guys is. You can use strategy to grow your small account into a big account. You can use strategies to scalp the market, because it's a scalping strategy as well, because we're taking 5 candle ticks, taking advantages of small price movement from the market. Right, so guys, if you found value in this video that I just shared with you guys, do well to like, subscribe, and share this video so that more people who need this type of strategy can see this video. All right, so do well to like and subscribe if you found this video very helpful. I will see you guys on the next strategy.